Today, my guest is Yael Tamar. She's an entrepreneur and a blockchain strategist with Solidblock, speaker, advisor, and a mentor. And in a minute, we're going to speak with her about blockchain and Solidblock and how it is transforming real estate into a financial product that can be traded using blockchain to establish the asset's financial history, increase its liquidity, and ensure optimal growth of the base asset via the data-driven platform. But first, I want to remind you, if you like the show, please let us know. We'd love to hear from you. You can like, share, and subscribe. And as always, we love to see your comments. Also, I want to remind you, if you want to see how attractive our guests are, be sure to check out our YouTube channel at Commercial Real Estate Pro Network. And with that, I want to welcome my guest, Yael. Welcome to CREPN Radio.
Thanks, Darren. Thanks for having me.
I'm really excited to talk with you today. As we talked just a minute ago about my little bit of understanding of blockchain, I'm excited to hear from you and learn more. Before we do that, if you could take just a minute and share with the listeners a little bit about your background.
Oh, sure. So my name is Yael Tamar. Currently, I'm the CMO, Chief Marketing Officer, and partner at Solidblock. And I am a finance and marketing person. So I got into real estate maybe about 7-8 years back when I was doing marketing for a big financial group, and we were working on different funds of funds, which included real estate. Other than that, I've been in fintech and financial payment and loan technologies for the last 5-7 years, an entrepreneur with several startups and some track record with that. For the last 3 years, I really got into blockchain because I realized it solves a lot of the problems in this world, especially in the developing world, because that's where at the moment blockchain is used the most. And in the developed world, it solves primarily any challenges associated with transfer of assets and transfer of information. So real estate is really what comes to mind when you think about an industry that really needs transformation when it comes to transfer of assets, which at the moment is a super complex process. So once I realized that, I had an idea that we could use blockchain to transform real estate investment and real estate trade, basically make real estate as tradable as regular stocks. You know, everybody's trading nowadays. Over 50% of US population is trading stocks on one platform or the other. And I discovered Solidblock, which at that moment my partner Yuval has already founded and done a very significant project, which is now considered as a flagship of commercial real estate tokenization. And we became partners, and the rest is history.
Awesome. Awesome. Well, maybe the place to start for this conversation is if you can just define what is blockchain.
Absolutely. So blockchain, you can think of blockchain as this big accounting system, like a ledger, that's usually public to everybody within the system. So you can see all the transactions there. You can see information passed from information or assets passed from one person to the other. Now, it's immutable, meaning you cannot edit past information unless you have certain privileges, and that's an advanced use of blockchain. And once you have this immutable public ledger, you can now transfer things like money. You know, Bitcoin is a prime example of blockchain use. In fact, it was the first example of blockchain use. And without blockchain, it was virtually impossible to transfer digital currency that's decentralized, meaning that's not governed by some sort of a bank or, central agency that creates that money. Now, why is this significant? Well, let's consider this. Let's say I have $10 and I want to send it to you, Darren. I can give you money in cash if we're in the same city, which we are not. I can send you, I can do a bank transfer and send it to you via bank. which will incur fees and will probably take a week from Israel to the US, which is kind of ridiculous. I can PayPal it to you, or I can Venmo it to you. So there are certain digital apps. Now, it's all complex, time-consuming, and there are fees involved. Now, with Bitcoin, you can actually do this instantaneously, and now I can send you an equivalent of $10 in Bitcoin. Now, how is my balance in Bitcoin going to be reduced by $10 and yours increased by $10 if there is no bank to subtract $10 from my account and add to your account, right? There is no bank, there is no central agency. Well, the whole system is built in a way that there are checks and balances within the system. People in the network or computers in the network approve transactions and adjust the balances, right, of each wallet. So that's a brilliant system that's now being used to transact. Now, not only with money, but also with real estate, but in a similar fashion. Also with other assets, IP, equity, a lot of different things, maybe information as well. So there are many creative uses of blockchain. But of course, as any new technology, it is looking for early adopters, which means industries that really need this transformation. And real estate is one of them.
Got it. So a couple of things you said there, kind of a, what did I write down here? A decentralized ledger was kind of what I picked up on. You mentioned, or what I was drawn from this was that there's like who's in charge? I mean, because clearly there's a framework. You have your computer, I have my computer. We both have an account on whatever the system is. So who's the host of this? Is that the sponsor? Like if it were Bitcoin, they would be the host. Is that am I understanding that right? Or
it is really confusing. I agree with you. So now we're gonna make order. Okay, so blockchain is just a platform like the internet. You know, who's in charge of the internet, really?
Right.
It's a network of computers around the world. It's not totally decentralized because, somebody can turn it off, or you have a huge network of computers and storage and cloud and whatever, right? Somewhere in the northern pole. You don't even know where that is, right? So that's blockchain is a similar platform. So at the moment we're using a platform called Ethereum. It's a similar platform to the one on which Bitcoin is based. It is decentralized in a way that, once we, Solidblock, record information on it, it's immutable. You cannot erase it. It's there forever. It's there forever for everyone to see. Now, there is no personal information on that we put on public blockchain. You cannot find anybody's name, anybody's address, but you'll see a wallet with a long string of numbers, and you'll see that this long string of numbers invested $200,000 in a specific deal. Yeah, so that's what you will see. So in that way, it is decentralized. Nobody can touch that data. That data is there forever. And as far as our system, investment, and it's completely compliant with investment regulation in whatever country the investor is located. So in this way, it is definitely centralized. So we have control over who can come in, who can invest. In order to invest, you have to fit in certain criteria. We have control over who can trade these investments because, again, regulation tells us that in some instances, retail investors cannot buy certain financial products. So we have full control over this, and we actually embed it in what's called a smart contract, which is a tool that you build on the blockchain that enables people to invest and trade. So we have full control over that. But once you have invested, it's yours. Nobody can take it away from you. It's in your wallet. Now, you can have restrictions over who you can sell to because of regulation. But if you can find somebody who fits the regulation, you're free to dispose of your asset, which creates liquidity. So that's where we are going. We're going towards a more democratic, more fluid, more efficient real estate market.
Right. No, and even in that, if I understand correctly, instead of selling the whole asset, I could sell a partial asset. Could I, again, because of now I control the valuation. If you and I were partners in a piece of real estate, and we had it on a blockchain or solid block technology, and I needed some cash, and I could either contact you or I could contact anybody else that fits the profile and offer to sell it without going through the whole transaction of involving all sorts of other people. Is that my understanding that right?
So you will still have, you'll have another type of a headache, which is called regulation.
Okay.
So that's something that it will be solved within a short period of time. But right now, if you own an apartment like a single family home, let's say with a spouse you're divorcing, you're not going to use this mechanism to sell. But if you have a multi-family, let's say residential project, in which normally you would raise funds, or you have a commercial project and you raise funds to build this project or to renovate this project, and then you would rent it out or you would sell it. So instead of selling the whole project, you can really spread your salary, so to speak, to different investors, right? And in the residential project, you don't have to sell apartments or homes. You can sell, again, square feet and the project overall. And so when I say square feet, really what you're getting is a digital security. You're getting a representation of your ownership in that asset. Yeah, and it's usually based on project on that asset valuation, which is usually conducted via traditional valuation methodology. So at issuance of this digital security, you're going to be paying the face value that's relevant at that time. Now, depending on the expectation of the markets, of the specific asset, and of the contracts, let's say rental contracts or anything else, you have certain sense of whether valuation is going up or down. But still, it's not going to completely disconnect from the actual valuation of the property, right? It will fluctuate, but it will go together with the actual, appraisal. Now, the interesting thing, the interesting parallel between, let's say, real estate and other industries, in other industries, you're not expected to sell your whole company, right? You can sell shares to raise funds. You can sell shares when you want out. So you expect this sort of liquidity. Now, in real estate, you're expected to hold this asset until it matures or until it enters the exit phase. Now, we're trying to change that and make real estate into a regular financial product, just like anything else.
Got it. So going back to the kind of the host, you mentioned Ethereum. Did I say that right?
Yeah.
Yeah. So they're essentially the host with all the computers, or they host the network, or what is their? And I'm just trying to understand, because where I'm going with this, and I guess being in insurance and stuff, what I recognize is there's constantly, if the bad guys know that you have the information, they're going to try and get to the information. And so my question is if you have this platform where, so Solidblock is one of multiple blockchain type like companies that are hosted on Ethereum. Do I understand that right?
No, absolutely. We're a technology company that provides a means or methodology, technology for real estate developers and sponsors to offer liquid form of real estate investment.
Right. And so what I was just kind of curious on the Ethereum being the platform, whatever.
The blockchain,
Yeah. So what is it? How is it that they're protected from as a bank or something like that? I mean, because
vulnerabilities. You're asking about whether there are vulnerabilities in the system. So Ethereum is a big blockchain company that's well accepted and an industry standard for many of what's called the decentralized applications, dApps, and essentially that's what we're creating now. As far as the mutability of data recorded on Ethereum, it's absolutely bulletproof. There's certain hypothetical scenarios that could upset that balance, but they're very, very hypothetical and much less probable than even, let's say, somebody stealing your credit card information, which has happened many times in the traditional bank. Now, there are some points of vulnerabilities, and they're more at the basis of your wallet. So you store your digital securities in the wallet, kind of like a PayPal wallet or a Venmo wallet, right? So with PayPal or Venmo, if you are hacked, and if you let's say you paid some provider that didn't intend to pay, or they stole your information, they will likely refund you the money, right? You go to the customer service and say, well, I have $10,000 here. Somebody came and unlawfully, took it from me. Through some investigation, they will return the money. The same with the bank, right? When somebody steals your credit card, they will replace the funds that were in your account. It's a part of the insurance process or whatever process that they have. Now, within a decentralized system, there is usually no provider that will replace your funds. However, Solidblock being a centralized entity, and we keep records of everybody's investment, and if certain hacking occurs, we know who the owners are, and we can trace these tokens and so on. What we're using is a modified structure, a modified smart contract called ERC20, and it basically goes under transformation. And there are ways we could retrace, and somebody shouldn't lose a home or whatever. That's one way. We recommend that people don't hold tokens in their wallet. We actually recommend a custodian, and a token, a digital asset custodian, is very similar to a traditional custodian for many other financial deals. They hold your tokens for you. They're centralized entity, and every time you want to transact, you do it through them. So that's another way to mitigate. But I understand that this industry definitely needs probably a bit more streamlining to make it more easy on the users. We make it super user friendly, so that investors don't even need to hear the word blockchain. All they need to hear is that here's a plain vanilla investment system. It's much more efficient than your usual one, and it's also liquid. You can basically liquidate your holdings either over the counter or on exchanges. Now, big exchanges like NYDSC, like one of the German stock exchanges in Hamburg, and smaller ones like Malta and Gibraltar, there are a lot of country, stock exchanges that are going to soon start or have already started trading security tokens, which basically is a name for a digital security that you're getting in lieu of your ownership in a real estate asset.
Got it. Well, I think what I heard and makes sense is just the ability to track the asset. I mean, that's really the beauty of the blockchain, is it not? Is that if I sell a piece to somebody else, everybody in that system that I'm in with knows who I sold it to, correct? I mean, doesn't
know that you sold it. So it's anonymized.
Okay.
But the asset itself, the real estate asset, has a complete financial history. We know how many investors came in. It simplifies due diligence. It simplifies valuation, because we know that in the beginning, let's say there were 30 investors in an asset. The assets kept changing hands, and at a certain point the valuation went down, the valuation went up. Companies are also going to become more transparent. Real estate sponsors are going to become more transparent with their investors. Asset management is going to become much more efficient. And the name of the game of this real estate game is going to be who's going to provide the better service to the investors, who's going to provide better returns, obviously, but who's also most transparent, have the best track record. You can trace the whole track record on the blockchain.
Got it. So how is Solidblock being used right now? When your current customers or people that are utilizing Solidblock?
Right. So our current customers are of two types. Number one is real estate sponsors and developers. that are financing their deals. We usually finance the equity part of the deal along with the bank financing. And the second type is real estate funds and funds in general, which can be tokenized. Existing funds can be tokenized to provide liquidity to the investors, so that enable trading between them.
Got it. And is the valuation? I mean, the token is just the symbol of the percentage of whatever the ownership that you have, correct? Okay.
Yeah.
And with your username, password, whatever that is, to get into the system, then you can identify, see that, and then if you had somebody you wanted to sell your portion to or a portion to, you could then, having your access, invite them in, or I guess give them access to a percentage, or I mean some sort of a.
So okay, it's actually very simple. We have a investment management platform where you go in, you see your holdings, and if you want to sell, let's say you want to sell specifically to your cousin. So your cousin needs to come in and register. They need to sometimes fit a certain criteria. You know, with different investments, it could be only open to accredited investors. So once your cousin undergoes, number one, accreditation check, KYC, know your customer, AML, anti-money laundering, they can get on what's called a white list, which is a list of investors who can invest in. So then you go into the system, and just as you would Venmo somebody your, some money, you would establish a payment gateway where in which your cousin transfers the money by a bank or whatever. It's registered in the system, and then your cousin receives the tokens or the digital securities. Now, if you didn't have a cousin who will buy your real estate holdings, then you will announce to the system. It's an over-the-counter desk where you announce that you want to sell, and then there will be bids from the people in the network, as it would be on any over-the-counter desk, which right now exists for bonds, commodities, and stocks, and so on, and Bitcoin, of course. Once you have a buyer, which agreed to pay the price you're looking for, the same type of transaction occurs. And then there's a third type of a transaction. If there is nobody on the over-the-counter desk that wants to buy, then you can, with a click of a button, push it out on an exchange. And there are many crypto exchanges right now that are, not many, a few that are selling security tokens. It's still, the regulation is still very new. So there are a few. And within a few months, there's going to be some big exchanges, like I said, country exchanges that will enable trading of a security token. So you'll be able to actually have access to a wide number of potential buyers.
Got it. A thought just occurred to me on, coming from outside the system to inside the system. Where is the transfer from whatever the currency your money's based in into the system? How do you control that? Or is that just like the exchange? If I'm selling from, if I have it and I'm trying to sell somebody out, is that that's the exchange right there? As I'm getting out and here's your. That's
a great point. So we're not a payment company or not a payment processing company. So we would normally use a transfer agent, and a transfer agent is a company that facilitates payments. So, let's say you're selling it, you're in America, you use US dollars, and they use Bitcoin or they use pesos or whatever. So they will pay the transfer company or the payment company in whichever currency, their bank account or credit card or crypto, if it is accepted, and you in your bank will get your selected currency, which is US dollars. You'll probably incur some fees in exchange rates, which will likely be calculated, within the price that you're looking to pay. So these are, I guess, these details we'll still, we have a certain framework that we believe works, but it's a framework that can change.
Right.
I think that the fees will be split between the buyer and the seller.
Well, that's currently, similar. If I was paying you something now, there'd be some sort of an exchange rate or whatever. So that makes sense.
Yeah. But it's definitely going to be nowhere near something that PayPal charges at the moment. Sometimes exuberant fees. Yeah.
Right. But it's just as far as the because again, if you're in Bitcoin or if I'm in one of these others or whatever the denomination is to get to the one that I want, it's within the blockchain system itself as far as the asset, the way the asset is tracked. We've got to get into that to get out of that. But again, the beauty of this thing is that now we can do the fractional sale,
absolutely.
ownership, transfer
we
of
split the assets.
Right.
We can split the assets however we want. It's not limited by units. It's not limited by floors or whatever. You can it's determined by the amount that you're paying. So if you have, $100,000 worth of digital securities, you don't have to sell them all. You can basically decide, I just need $20,000 right now, so I can sell a fifth of my shares, for example.
Got it. So where are you seeing the most use of Solidblock? I mean, is it in Israel, or is it? I mean, are you seeing it in the U.S., or are you seeing where are you seeing it being applied? I mean, is it?
Well, our main. Sorry.
No, go ahead. No, I'm just kind of curious because I mean, the topic, and clearly, I think that the majority of people I know tend to think of it as something like a cryptocurrency, Bitcoin being kind of the lead, but just, I mean, everything we're talking about is not unique to Bitcoin. It's about the technology. And so
like I said, it's very plain vanilla traditional. We have very traditional deals sometimes in the US. We like yielding projects. We like commercial real estate. We're seeing a lot of projects in the US and Europe, and we have a lot of demand from Asian-based projects. So obviously projects and developers have identified this new market where they can now raise funds. So that's great. In terms of investors, it could be really investors from anywhere. In Israel, we are working on a project right now. We haven't seen many tokenizations in Israel per se because the regulation here is not 100% clear. The US has the most straightforward regulation, governed by the SEC, a little bit more stringent than Europe and a lot more stringent than Asia. So it's really the game of compliance because we're now in the territory of securities. We're no longer talking about a hard asset once we split it up and we securitize it, right? So now a lot of people are going to say, okay, it kind of reminds me of the subprime crisis because you're taking an asset and then you're coding it into something, that could be potentially misleading to finite investors, and next you're going to issue derivatives collateralizing these assets, and we're going to go down that rabbit hole. So that actually is definitely not the case with blockchain, with security tokens. Number one, because the name of the game here is valuation. Because of the promise of liquidity, there are constant reporting, constant oversight of each asset. In fact, we're working very hard on creating the industry of data and information. You said in the beginning, the data-driven platform, which is Solidblock. Without the information accurate information about assets, there won't be any trade going on. So we will not have liquidity. All the stock trading you see right now across the board is fueled by news. This drug is on the market, the FDA approval, or a new contract, or a new feature on Facebook, or in some cases, it's very detrimental when you get it wrong. Let's just take a look at WeWork and what happened there. Overvalued asset. So for us, it's crucial. So for projects that we are leading, we have internal valuation, internal appraisal team that is looking at each project to make sure it's not overvalued at issuance, because from there, it only needs to grow. So that's number one. Number two, the only thing we're doing is basically creating a security on top of a base asset, a real estate asset, hard asset. We're taking large projects by proven developers with a track record, ensuring that each project is legitimate, owned by whoever, claims to own it. So there's definitely due diligence on our platform. And that's how it should be, right? So even though it's a private placement, it's not an IPO in a sense, but in many ways, it undergoes a lot of scrutiny. Most projects will need to have a private placement memorandum regulated by SEC or similar regulator in other jurisdictions. So this is all done to avoid a similar situation to a subprime crisis.
Got it. So Solidblock. So how are you guys compensated for? I mean, is there a fee? I'm assuming to be the sponsor to put your deal on Solidblock. Is that how that works, or is that?
Right. So yes, we do have issuance fees, as you would with any tool like a stock exchange would have a listing fee or an issuance fee. And then we also have a transaction fee for the funds that are coming in. So that's our business model. In some deals that we really like, we may create a general partnership and, come in as a partner, and then bring our investor networks on board. So it's actually a very interesting model in which we also have some skin in the game to show investors that these projects are worthy of their intention. And in the future, we're planning to license our platform to large institutions and real estate funds. In fact, like I said, the name of the game is catching up and fear of missing out. This industry is undergoing incredible transformation. In fact, it's one of the last industries to undergo digital transformation. And the real estate funds that are not going to offer liquid, transparent, and efficient products are going to lose out. We're dealing here with millennials that don't really like buying apartments anymore, especially not for dwelling. They want to buy real estate for investment. They don't have patience for all the paperwork and mortgages and things like that. So we're dealing with people who will want to put in a few $1,000s every month, perhaps, if we're talking about retail public, which hopefully will get access to tokenized investments within a few years. We're talking about accredited investors. It's very similar. People are looking for, especially in uncertain times, and some people are claiming, there's another crisis coming up, another recession coming up. So they're looking for more liquid products, and we're offering that with Solidblock.
Got it. So how old is blockchain? I mean, from when was Bitcoin? Has it been 10 years?
Yeah, 10 years.
10 years?
So last New Year's Eve, yeah, it was around 10 years. So it's a little more. So it was created in 2008. There was this white paper by a group of individuals by the pseudonym of Satoshi Nakamoto. They created basically just the initial network for Bitcoin and the rules of that network, which are pretty brilliant. And for a few years, Bitcoin was trading until around 2012, and where Ethereum was born, and we started seeing other applications. People started realizing, wow, blockchain is good for other things. Like, I'll give you an example that's not in real estate. Walmart and a lot of food suppliers, the largest food suppliers in the world, like Kraft, Nestle, and so on, like competitors, came together to eliminate foodborne illnesses in products and to enable Walmart and other retailers to take products off the shelf immediately because of this string of information that's being passed throughout all the stages of the supply chain. So if you pinpoint a source of, or not a source, the end point of contamination, you can trace it down to the source of contamination and then take those products off the shelves instead of taking all of them off the shelves. Yeah. So this is an example of successful blockchain implementation. There are many more, especially in pharma, in health in general. Like I mentioned, supply chain, IoT. There are many industries that benefit from blockchain currently, and real estate is, to me, a more significant one, because real estate is the basis of wealth for many people. So we want to give people opportunity to really reach their goals and dreams. It's very hard in this environment to be able to accumulate wealth. You have people defaulting on student loans, and in general, this sentiment is unhappiness. and I think with fractional real estate investing, you will give people hope that they can really get to the lifestyle that they want.
Oh. Outside of the example you cited there, the Walmart and the food and that stuff, is there a level of data or information that this fits, above? Because I'm assuming there's some sort of a threshold. If I'm going to go buy a candy bar at the grocery store, I'm not going to, put it on blockchain, or, I'm just kind of trying to think through this. On the bigger deals, it makes complete sense to me, because you have lots of moving parts, lots of investment, and not everybody's aligned with how they want to stay in, or their timelines can be totally different, which to me, I'm going, this is brilliant. But I'm assuming there's a threshold that you see as far as, where this makes sense. Is there a threshold you can point to, or?
So
or
at the
data
moment, because
points or number, I guess either be number of data points or volume, or I don't know if that makes sense.
Yes, absolutely. So at the moment, because of the relatively high costs of securitization, the legal processes involved, we're looking at projects that are valued at least at $3-4 million, but ideally more than $10 million is an equity part. Of course, there's a 75% bank financing, so you're looking at obviously larger projects. So large multifamily or large commercial projects would make sense at the moment. However, I think in the future we're going to be seeing even private homes and apartments tokenized to simplify these transactions, especially when the market becomes more open to retail investors. But at the moment, it is large projects that definitely need liquidity, so to speak, and efficiency in letting investors decide where their point of exit is. I think you touched it wonderfully. When you have a mismatch of investor appetite, risk appetite, or the time that they prefer to hold each security, blockchain provides them with flexibility to decide for themselves how long they want to hold, how much they want to buy at, how much they want to sell at, and so on.
Got it.
And when, yeah.
Got it. So blockchain's been around for a little over 10 years.
Right.
How long do you see, if you're looking down the road or the crystal ball, before it's more, ubiquitous, widely used?
Yeah, mainstream.
Yeah.
Adoption. So I look at blockchain, blockchain is a new technology. There is usually an adoption curve. So you have this peak in the beginning, which we saw 2-3 years ago, magnified by the hype around blockchain, investor interest, and so on. And then you kind of saw, Bitcoin crashed a little bit in comparison to where it was at $20,000, down to $3,000, and then started climbing up again. And blockchain, the interest has become, more proportionate, and you see growing faster and faster. So in these situations, you really need to look at early adopters of this technology. And right now, actually, a lot of early adopters are in the third world countries, the developing countries, places where payments are a big pain, places where supply chain, solutions are crucial because they lead to, epidemics and deaths. So in many cases, we don't hear about blockchain implementations, but they happen at the government levels. Most banks have implemented blockchain to actually do interbank transfers, and they created more of private blockchain networks, what's called a permissioned blockchain, which is not public like Ethereum. You cannot read the transactions online, which you can with Ethereum, but more of a permissioned, meaning certain players within the system have access to information, and certain players can edit. So blockchain also provides flexibility with that. So you see those implementations. Now, what is really mass adoption? Like, we're looking at internet, everybody's on the internet. Blockchain is different from the internet in the way that it enables applications like the internet. So I think in the future, you're going to be touching on products and services, not even knowing that they've been enabled by blockchain. Like when you go to Walmart, you may buy a product and see like a barcode on a product where you can scan it with your phone and, let's say, know where this product originated, where it traveled, and so on. So you don't care that it's powered by blockchain, but that's what blockchain does. And you may invest in a real estate deal that's tradable. You don't necessarily need to know that it's powered by blockchain. So I think in 10 years, you're going to see many of the industries employing blockchain, behind the scenes.
Got it. And that makes sense from a standpoint of, when you have big numbers you have to manage, or even the chain of process, like you're talking about the food. And I know that I've heard even talk about like just the chain of title, like from a title, which clearly what you're talking about with ownership, but just title, because that's essentially what we're talking about. Even within that is the title of this one piece that this asset, kind of thing. So
actually, we're involved in a project in Africa, in a small country called Somaliland, a project called Terramal, which is creating a blockchain-based land registry where these transfer processes will happen on the blockchain. So we're building from scratch. So they're building from scratch this blockchain-based registry, and Solidblock is going to be tokenizing assets and land based on that system. So it's been done in different places all around the world. In the US, you had several pilot projects for changing custody, right? Changing transfer of real estate assets on the blockchain as well.
Another question here for you. As with most industries, when you're disrupting it, there's resistance because somebody's being displaced. Where have you seen the resistance or the pushback for blockchain?
So there's much less resistance from, let's say, intermediaries. And there's more of, this is very new for us, and we want to see where it's going before we jump in. So like I said, every new technology needs definitely its early adopters. So we're seeing companies, and especially real estate funds, the project that we did in the US called St. Regis Hotel in Aspen, Colorado. It's a Marriott brand. They are very bullish on technology. That's a term for, they're very forthcoming and like technology. So they gave it a shot. So that's a type of a user that we like. Companies, real estate developers that are understanding that this is the trend, and assets that are existing already, and they're understanding that in order for them to bring more investors on board, next time they need renovation funds, or maybe they want to sell, the part of this hotel or part of this asset. If it's on the blockchain, and tokenized, it's going to be much easier to conduct transactions.
No, that's awesome. Yael, I want to shift gears if we can. Before we started recording, I mentioned to you I'm an insurance broker, and one of the things we do is we work with our clients to manage the risk. And there's three strategies we typically consider. One is we can avoid the risk. Two is we can minimize the risk. Or three, we can transfer the risk. And that's essentially what an insurance policy is. And recently I started asking my guests if they could identify what they see as the biggest risk. And so just to be clear, also want to make certain, I'm not necessarily looking for an insurance-related, risk per se. But if you're up for it, I would like to ask you, Yael Tamar, excuse me. I want to say it right. Yael, right?
Yael Tamar.
Yael Tamar. What is the biggest risk?
So there are many risks in real estate. I guess the top ones are market risk, then picking the wrong asset, and I would say liquidity risk because of the impending crisis or recession that's going to happen. Now, on the asset level and the market level, you can mitigate these risks with information, right? So you can look into market reports. You have plenty, CBRE, Colliers, the information is out there for you to show where they think market is going. There are credit agencies. There are all kinds of indicators, right? On the asset risk, I guess it's split in two. Number one is your due diligence, how much you know about these asset owners, asset managers, developers, and so on. So if you did your due diligence. And number two is basically if there's a right fit from the asset to the market, right? So if residential real estate is a big one in this area, or commercial, so you kind of have to have real estate experience, right, to understand this. So if you're a savvy investor, this kind of comes natural to you. So there's a combination of market research and a market fit. So this is a market fit. So both of these things you kind of can solve because with more information and more experience. Now the third type of risk, the liquidity risk, is much more problematic because ultimately what you have is forces that are beyond your control, like an impending crisis or or recession, or maybe there is a war breaking out all of a sudden in that country, or a hurricane or a tornado. There are many things that could happen, and insurance companies obviously are also aware of these like force majeure or maybe even trends. So with this in mind, we're talking to many real estate investors right now, and they're saying, well, we're not investing in development projects in certain areas that we see there's going to be a slowdown. So we're looking for either a quick flip or a yielding project in those areas. And it's understandable because they don't want to be tied in a property that's going to go down in value. Now, that's liquidity risk. Now, if we're solving partially, the liquidity problem in which, you can sell your property, you're probably not going to be able to sell it at a full price, obviously, because there's going to be less buyers, but you still have a possibility to recover some of your costs or to, to get out before a certain time, which you deem more risky. So, and that's why we're in this business. We feel that the other types of risks can be solved, like I said, with more information and more data, which we provide to the maximum. And the liquidity risk, we're mitigating through enabling trade of these assets.
Oh, I love it. The liquidity thing that you pointed on is truly unique to what blockchain brings, and that's a great way to tie that in there. Yael, where can the listeners go if they would like to learn more or connect with you?
Absolutely. So solidblock.co is our website. Check out the blog. We do weekly blogs on there. I actually have a blog specifically for commercial real estate trends and blockchain and tokenization. So that could be very helpful. We think about topics related to whatever processes are happening in real estate and how the industry will change. So we're very forthcoming in that sense. So check out the blog, absolutely, and you have our contact information there. I'm on Twitter at Yael Tamar, on LinkedIn, Facebook, every network, very accessible. If you have any questions, be happy to have a conversation with whoever just wants to learn. By the way, we're also giving tokenization workshops to real estate companies and to institutions, right? So all around the globe, we usually get invited to kind of educate the public, and we're definitely like evangelists in the tokenization space. We teach courses in various online universities. So come and join us in this revolution. We'll be happy to have all of you guys.
Awesome. Yael, I cannot say thanks enough for taking the time. I've thoroughly enjoyed it, and I hope we can do it again sometime soon.
Oh, yeah, absolutely. Me too. Thanks, Darren.
All right.
Thanks, everyone.
For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.